exciting than it used to be. Yeah, people are now beginning to ask questions, to know more about how to invest in the Nigerian stock exchange market and even in the US stock exchange market. And this is a very interesting one. This is what the S&P Finance Club seeks to achieve. Over the years, we have been at the forefront of financial literacy education in Nigeria and West Africa. And we are happy that a good number of young persons are beginning to ask very important questions on how they can make their money work for them, and then how they can do it the right way without losing money or investing in Ponzi scheme or get quick rich schemes and similar platforms. So I'm happy to have you guys. And this section is even more interesting because we have our own our own Jennifer Ifechi Afonsos. Jennifer is a project manager and as well an investor. This is not investor Savinus kind of investor. This is a well-grounded investor, experienced investor. Her experience has spanned across industries ranging from the Nigerian Stock Exchange Group, you know, to several other industries, and she's also a project manager. Yeah, so eh, as a project manager, you have to also understand the backgrounding effect of investment and how it works. So Jennifer is well experienced and well versed as regards on investing in the stock market. She's always my go-to-go person when I have some important questions regarding how my investment is working and the areas I should be looking at. So guys, I am telling you that we are so lucky to have her tonight. We are so lucky to learn from her wealth of experience because Jennifer has so much in stock. I believe by the end of this section, you will know that she has so much in stocks, even though she will be doing something for beginners, but I want you to pay more attention, because she's going to reveal a lot of secrets that might help you as a beginner to build an interesting and endearing portfolio, you know, and so it's important you stay glued, use your earpiece, stay away from distractions, at least for the next hour. Mute your phones, don't receive phone calls except it's very necessary because you wouldn't want to miss any particular point. And why it's important to follow this live section is because you have opportunity to ask questions than when you are following YouTube channel, you know, ask questions and get a direct response from our facilitator, instead of asking questions on the WhatsApp platform. So, ladies and gentlemen, may we welcome our own Jennifer Ifechi Afonsos. Jennifer, thank you so much. Thank
Thank
you.
you. Thank you, Chesenli, for the lovely introduction. I myself am like, is it me? Is it me? That's it, someone else. But thank you so much for the introduction. I'm honored to be in presence of everyone here. Um, for some people, this topic is not new. They already are veterans of the market. But for beginners, I think this really helps. And I know every time I present, it's always UK, US, and people always like, majority of the people here are in Nigeria. Please bring it back home. So today, with the help of D and SEP and every ESCO of the S&P Finance Club, we are bringing it home to Nigeria. So I hope as you as you listen, I hope it brings something new to those that are already veterans and those that are beginners. I hope it helps you to have a thorough understanding of the Nigerian stock market. I remember when I started investing, I think I began my career after NYC at the Nigerian Exchange Group. And from there, I started understanding capital market. I began interested in the capital market and trying to see how I could use that to generate wealth for myself and everyone around us. I remember one of the issues then we were facing was the low adoption of financial literacy in Nigeria. and we were trying to bring on board youths. And so I am very honored to say that in our midst there we have youth. Youth in Nigeria is 18 to 40, I think. So we have youth here, like ones that are 60 claiming 40. God will help them in Jesus' name. So welcome. And I'm sure the Nigeria Exchange Group would be excited to see that there is now a wide adoption of capital literacy, capital market literacy in Nigeria. So let's begin. I don't want to waste anyone's time. And if you have any question, this is an interactive session. You can always bring me back to explain any term that is ambiguous to you. I'll try as much as possible to explain in simple terms and make you understand as I go ahead. Thank you. Okay, so let's begin. So why should you invest? Um, when I finished from university, I noticed that GT Bank was giving me, I think, something like 2%, 5% on my interest. And I was like, okay, what is this extra income? I was excited, but after working at the exchange group, I realized that I could get more. These people were actually using my money to trade, to give out loans, to invest. And we're getting high interest from the government, and they were giving me a meager sum of 2%. And I said, you know what? I have to learn how to invest. Unlike other people, unlike me, there were people that were investing and were already making good use of the Nigerian stock market. So when you put your money in the bank and you don't use it, you are at the bottom end of the financial ladder. Some people don't even get interest because I think it depends on how many times you do transactions in your account before you can get interest in your account. So some people don't even get interest. So imagine giving the bank, the financial institution, free money to do as they will, and they making such high returns on your money and you not getting anything at all. To me, it actually makes no sense. So when you keep money in the bank and you don't invest or save, what happens is that you begin to lose purchasing power of your money. $1 today is higher than $1 tomorrow. So that's because of what we call inflation. Every year, the average annual inflation in Nigeria is 20%. So that means that if you have 100 naira today, by next year, the 100 naira is worth 80 naira. And with the way Nigeria is growing, I'm thinking sometimes I feel like this figure is not a true reflection of what is happening in Nigeria. So you can imagine if the official figure is saying 20%, that you're losing 20 naira for every 100 naira that you get every year, what the unofficial figure would be. And so that's the reason why we pick investment for people to take advantage of the financial market. So strategic investment can generate returns of 10 to 30% or more. I know is this Stanbic IBTC or so that's giving 17% interest on your mutual funds. Some people on money market funds, they are getting higher returns. Some people on lending, they are getting higher returns. Why you, like I said, if you just leave your money in the bank, it protects your money, but then it doesn't protect the value of your money. And you could as well get more returns for it. So now let's look at investment options in Nigeria. I know I mentioned mutual funds earlier on, so we can see it on here. So we have several investments, financial vehicles, as people call it. We have one what we call stock. We have always been hearing stocks and shares. Stocks are part ownership of a company. So let's take, for example, MTN that we all know of is listed on the Nigerian Exchange Group. When you buy a share from MTN, that means you are part owner of MTN company. So that means whatever decision they want to take, when they come to general meeting, you have the ability to vote. I always get notifications for my stocks to vote in general elections. So that's what stocks does for you. It gives you part ownership of the company. When it comes to stock, I think stock is one of the things that make people scared the most. I remember I don't want to call it battle in Transcorp between Tony Oyemelu and Forte owner copies that, or $10, yes. You could see that what they were using to battle each other was the purchase of stocks in the company. And the higher percentage you have, the higher percentage of stocks and shares you have in a company, the higher authority you have. Olumelu, sorry, I think I mixed it up, sorry. Olumelu actually noticed that $10 was buying more and more stocks in Transcorp, and he decided to go ahead and buy up the extra ones that are remaining so that $10 does not have the upper hand in of affairs in Transcorp. So that's what stock does for you. The more stocks you buy gives you more power in the company. And also, when you watch movies, you see it when someone says, "Oh, I've bought your shares. Now I have 75%, which give me controlling power of decisions in the company." That's what happens with stocks. I think it's one of the most how do I put it? It's one of the most important investment option in the world. The next we have is treasury bills. These are government-backed treasury bills, securities. They are mostly short term, like 3 months. You get your returns instantly. So those of you that don't want to invest long term, you just want your money sharp, sharp, and you just want to like I don't know what's going to happen in the next 6 months. So what I'll do is just invest low in treasury bills. Then after 3 months, after 6 months or so, I get my money back, look for the next investment option, and then I can put my money in it. And if you look at what happened with Europe and USA, what happened was that they dropped a lot of treasury bills of the US government. And what happened when we say they dropped a lot of treasury bills, it means that they forced the US government to give them back their money with interest as soon as possible. And that really tanked the US stock market for a while. So these are very, very aggressive investment. These actually have real life impact. So even though because you are not able to buy a lot, does not mean that when you have the opportunity of buying much, you can't do ample things to countries, to companies, and to global institutions. The next we have is mutual funds. Mutual funds are actually professionally managed portfolios and diversified across various assets. What do I mean by mutual funds? Take for example, if as a beginner, you are not sure if you should put money in individual stocks, if you should put money in exchange traded funds, you don't know where to put money in, and you don't want to sit down and start analyzing the stock market. So what do? We have professionals that have portfolios and say, you know what, come and invest in this portfolio. All you need to do is sit down, relax, and we would manage your portfolio for you. The only thing is that at the end of the year, from your returns, you will give us what we know as expense fee. So, management fee for monitoring your portfolio for you, for doing the analysis of the portfolio for you. And most of the returns are around 12 to 25%. So what you can look for a mutual fund that is invested in technology. You can look for those that are invested in commodities. You can look for those that are invested in utilities, and you can look for those that have diversified portfolio across global assets or even national assets in Nigeria. And like I said, they just give you the option of invest in this, go and sleep, and just monitor to ensure that they are actually doing what they say they are doing. It won't make sense for you to be paying for someone to be managing portfolios and they are not giving you tangible returns. And like I said, one of the good returns we have in Nigeria is Stanbic IBTC or so with 17%. And they keep on increasing it. It depends on how well the market does for that year. Then we have real estate income. So most of you, when it comes to real estate, you picture physical assets like houses, like companies, commercial real estate, lands, and all. We also have what we call the real estate investment trust. That means if you don't have a lot of money to invest in properties, to buy lands, to buy commercial properties, assets, and all, what you can do, you can invest in what we call real estate investment trust. They are traded on the stock exchange. You go, just buy like shares. You just buy the small quantity that your money can afford. And at the end of at the end of the year, they give out, I think, 90 to 99% of their entire income for that year. They share it among the investors. So those are ways that you can also make money. Then the next thing is fixed deposits. For fixed deposits, like I said, if you put your money in regular bank accounts, you get probably 2, 3, 4, 5%. But with fixed deposit, you can get up to 8, 15%. But they always come with a caveat in the sense that they restrict how much money you can remove. If some will tell you you can't remove any money at all, and you need to fix this money for as li- as at least 3 years or at least 2 years. So these are for money that you don't intend to use and for money that you're scared of putting in risky assets like stocks and mutual funds. Then we have bonds. Bonds are what I call IOU. When you hear bonds, it's basically IOU. The government issues bonds, issues IOUs to you. They collect money from you and say, oh, at the end of maybe 1 year, 2 years, 10 years, I will give you back your money and I'll give you back this interest. So take for example, if the government says, oh, I've released a bond, and you say, you know what, I'm buying 20,000 naira of this particular bond. Assuming the bond is for 2, 3 years, what happens is that at the end of 2, 3 years, at the end of 2, 3 years, is that they'll give you back your 20,000 and then they give you back your interest. Sometimes the interest can be given to you annually, can be given to you semi-annually, or it can be pushed to the end. So you have to look at the terms and conditions of the bonds that you want to buy. It's the same thing. Corporate companies also issue bonds. For corporate companies like Dangote can come out and say, you know what, we want to we want you to come and we want to sell this bond. We need some money. We don't want to go through stocks. We don't want to sell our stocks. We just need money for a short period of time. Can you just quickly come and buy our bonds? This is the percentage that we give to you in return. And also, what the bond does for the companies is that it doesn't dilute their shares. It doesn't increase the amount of people that will own their company. So bonds are quite safe for companies that don't want to sell their shares, basically. So you can look at bonds. Bonds are typically safer than stocks because there are a lot of scrutiny on bonds, and the fluctuation on bonds is not as high as stocks. Bonds, we can receive a news today, and bonds will probably just move by maybe 0.5%. But stocks has gone down as much as 20%, 25%. That's how risky stocks can be, and that's how safe bonds can be. That's not to say they are not risky bonds. It's just that the level of risk for bonds is quite low. So these six investment options in Nigeria, I hope I've been able to explain them clearly for you. So now let's understand stocks. Stocks are what? They represent ownership of shares in a company. Like I told you, the amount of stocks you own will determine your control in the firm. And that's the reason why companies like startups, you say they don't want to give out a lot of their equity, because if they do, if they give out a lot of their shares, what will happen is that investors can take the entire startup from them. The same thing with stocks listed on the stock exchange. They try as much as possible to ensure that they don't list out all their shares so that people outside don't take over the company. And there are types of stocks. We have blue chip stocks. Those are stocks that, if you put money there today, tomorrow you come back and find your money. The companies are going nowhere. So those are the those are the companies that are stable. So we've got Dangote, MTN, Nestle. I think Nestle has been doing well since the time I've known about the stock market. And then we have high growth stocks. Those are the ones that today you put money in them, next month they've gone as high as 100%, 150%, and some of them we crash, and some of them have the potential of doing better. So they have the potential of increasing in prices. And then another variation of high stocks are those ones that that they are focused on growth, expansion at the moment. Take for example, I think Tesla does not give out sorry, let me not mention Tesla. I don't know stocks in Nigeria. I would have loved to mention stocks in Nigeria, but me, I know Tesla does not give out dividends, but it invests its income in the company. So look at the stocks in Nigeria. Which company is growing faster? Which company do you know that will grow fast, will be stable, will be stable very soon once they're able to go through their research and development and create stable products and generate stable returns. You will notice that most of them don't give out dividends for the moment, but you can see that there's potential for these stocks to be 1,000 naira per share in the nearest future. You know, so there's a potential they might give you dividends in the nearest future. But for now, rather than giving you the dividends, they are reinvesting the money back into their company and and growing at a faster rate. So those are high growth stocks, like I mentioned. So popular Nigerian stocks, we have Dagote Cement. I've been seeing a lot of that mentioned in the group chat. We have MTN Nigeria. I remember when we wanted MTN to come and list in Nigeria Exchange Group, and we are happy that they did. We have Nestle. Nestle is a very stable company. We have GTB. GTB has been very good with their dividends also. We have Boa Cement and Airtel Nigeria. Now, let's look at the Nigerian Exchange Group. I've been mentioning the Nigerian Exchange Group. For you to be able to buy and trade stock, there has to be a platform. And that platform in Nigeria is the Nigerian Exchange Group. It has over 150 listed companies, and the top sectors, like you can see, are banking and financial services, oil and gas, consumer goods, Nestle, Dangote flour mills, telecoms, your regular MTN, industrial goods, and construction. I remember when I asked one of I asked a capital market player, if you want to invest in any stock today, what would it be? And I was like, we don't necessarily give you advice on what to invest in, but what we can say is, what is that thing that you use daily? And you can see that the company that produces it is listed on the stock exchange. And I said, oh, I drink Coca-Cola every day. I say Coca-Cola is listed. Coca-Cola is not going anywhere. You know, Nestle, I take Milo, I take Nestle Nido. So it's listed. So I said, okay, good. That's another stock I can buy. It said MTN too. MTN, I use MTN to make calls. I use MTN to do data and all. They are going nowhere. They have been in Nigeria for a long time. And I said, okay, you know what? That's something I can do. So as a beginner, I decided to work and invest in stocks that I use their product daily in my life. So from there, I was now able to move on to other things. So for beginners, I would say, look around you. What is that thing that you use that you believe that, oh, it's going to be there for a long time? And check on the stock markets and check which companies, if the companies are producing it on the stock market, and if they are really doing well with their stocks. And then you can start from there and buy and monitor their returns. Now, bonds and fixed incomes, we talked about government bonds, short-term government bonds are what we know as treasury bills. We have corporate bonds, which I've also mentioned earlier on, and we have commercial paper. So like I said, bonds are basically called I owe you. It's more of I ask you for money, you borrow me the money, and at the end of the term, I give you your money plus interest annually, semi-annually, or quarterly, depends on what is written in the paper. The most important, I think, one of the popular bonds I know in Nigeria is a Sukuk bond, and I think it has been doing well for a while. So you can take a look at bonds that are listed or are available for you. The federal government agency that does this is the Debt Management Office. I think with the way Nigeria is going with its debt, they should still be able to pay some, well, with the way we are borrowing. So you can look at it, if you're safe with the fact that the Nigerian government will keep on having money to pay you back your money that you borrowed them, you can invest in government bonds. If you are not sure, you can decide to go short term and decide to do 3 months, 6 months, or 1 year, which is what we have with the treasury bills. And you can see the returns and you can just invest in them. Try and see if you like it. If you like it, you can try it again. So maybe you try with 3 months. If you like the return, then you go ahead and try with 6 months. Then you look at the Nigeria economy again. Okay, election is coming. Let me still try 3 months. Or you might say, oh, if election is coming, there will be high risk in the economy. Probably the returns will be high. So you might do 1 year to go around the election period. Corporate bonds are issued by companies, like I said. And one thing with corporate bonds, you have to be sure that the company that you are borrowing from is going to give you back your money. There are a lot of ratings out there for companies. You see a rating AA, you see rating BB, you hear of junk bonds. Those ratings are very, very important. Companies and countries that are rated AA will surely pay you back your money. Companies that are rated BB, well, some have defaulted, some will pay you back, but it's 50-50. The companies with the junk bonds, those ones, I really don't think you should near them because the probability of you getting your money back is zero. So you can try that, check around which companies have corporate bonds for you. And if you can try it, you can, don't just stick to one investment, try and explore other things. And the same thing with commercial papers. I think was it Dangote also that released some commercial paper for people to buy. So they are actually unsecured debt by blue chip companies, and you can decide to invest. And like you see, the minimum investment for it is 10 million. So if you have 10 million to risk, you can decide to put your money in it. Now we go to mutual funds and investment funds. One of my biggest, one of my stable and biggest portfolio assets is in a mutual fund, and it's in a global mutual fund. And the reason why I like it is that I don't have to worry about the fund, because even if a country is misbehaving, other countries are actually doing well. And the same thing with Nigeria. If the mutual fund is for assets in Nigeria, if one company is misbehaving, other companies in the mutual fund in the portfolio are going to actually help the fund, help the portfolio to do well. So take for example, if you are an investor that's investing in one asset, MTN, and then you have investor B that is investing in a mutual fund. If MTN goes down by 50%, the one with the mutual fund may actually go up. And sometimes, even if it goes down, it might go down by maybe 5%. That's how mutual funds can actually save your life. Not to say that, I'm not saying that there are not risky mutual funds out there, but there are different levels and you can pick which one you want. So their risk is typically low and returns are around 10 to 15%. And in a good year, you can get as 20, 35%. So it depends on what mutual fund you are actually buying. So we have the money market funds, which is like the treasury bills, which we've mentioned earlier on. We have equity funds. Equity funds are those mutual funds that are invested in stocks and shares mostly. So you can see that the return is actually high, 15 to 30%, because the volatility in stock is quite high. So in investment, we call high risk, high return. So the higher the risk, the higher your return. So we have that. There are some that even when it comes to equity funds, there are some funds that are focused on low volatile assets, and there are some that are focused on high volatile assets. So you can look at them. Low volatile assets are mostly in the commodities, in the utility sector, commodities like Nestle, in the utility sector. So you don't see their movement as high as those in, probably, I think, was it 1111 or so. I've forgotten the company that went as high as 1000% return. Imagine having that stock in a portfolio. That particular mutual fund is going to go high, as opposed to one that's got Nestle in it that will probably do 15 or 30%. So the same thing with bond funds. Then balance funds are those ones that you are going to be retiring very soon, or you don't want to risk your money in stocks only. So you can look at a mutual fund that has a mixture of stocks, bonds, and money market funds. Take for example, the portfolio will be okay, maybe it's 50% is more like your retirement portfolio. You see probably 40% in stocks, 30% in bonds, and the money will probably be 30% in money. It depends. So it's a mixture. For someone like me that has a longer time horizon to retirement, I have up to 40 years to retirement. I don't need to buy I don't need to put money in mutual fund that is 80% bond, 10% stock, 10% money market. That's waste of my investment. I have a longer time horizon for my portfolio to fluctuate. So I as well put it in one that has 70% stock, 20% bond, 10% money market. Like I said, I have over 40 years to retirement. It's going to fluctuate, but I'm not leaving any money on the table. I'm going to make more money. The same thing with real estate funds. Like I told you, talked about REIT. These are ones that are companies that invest in real estate assets, and then they have their shares on the stock market. So rather than you going to buy a land, you don't have 10 million to buy a land. You can see the company listed on the stock market and say, okay, you know what, I have 100,000 naira. Let me buy this company's shares. At the end of the year, when they make profit, they are required to share, if not all of their profits to investors. So you make your money from there. Dollar funds are those that want to hedge against devaluation of the naira. So you are scared that naira is going to devalue in the coming upcoming election because um, politicians will be requiring money for election. You know, the more pressure on the naira, the more the naira devalues. So you'll be seeing exchange rate of the exchange rate will probably jump to 160 to $1, 2,200 to £1. So things like that could happen. I'm not saying it's gonna happen, but I'm saying if due to election period, there's always a pressure on the naira because people are trying on the dollar also because people are trying to convert their money to dollars, and so politicians are looking for any rates. As far as they're able to convert their money to dollars, they are fine. So once you have things like that, naira is going to lose value and dollar could increase in value. So if you are worried of something like that, you can put your money, you can buy dollars and then put it in dollar funds. I think GTB does 5% for dollar funds in a year. I don't know how much it is now. So as at the last time I checked, it was around 5%. So you can put it there and say, you know what, when the rate is now probably 2,200, you can now convert your dollar to naira and get, first of all, you're getting interest, and secondly, you're getting arbitrage from, let me not use arbitrage, you are getting returns from, converting money back to at 2,000 rate. I pray that naira does not go to 2,000 to a dollar in Jesus' name. Amen. So let's go to the next one, real estate alternative. So you have direct real estate, you have real estate investment trust, which I've always mentioned. Direct real estate is you buying the asset outright. I want to buy land, I buy land. I remember I saw a joke on X where someone said, the company told her that the land that she purchased has gone from 500 to 1.5 million. And she said, you know what? I don't longer want to hold this land. Come and buy from me. And they told her that they revalued the asset and told her that, oh, it's no longer 1.5 million. They will buy it, I think, around 600 or 700,000 naira. I forget the story. And I was laughing because it shows that sometimes the value of land can be inflated when you want to sell back to the people that you bought it for. So you might say that, oh, you want to take that risk. And there are also good news. I remember someone growing up, someone told me that, oh, there was a land then at Ikeja, where it was selling for 40,000 naira. Now, to buy a land at Ikeja, you should be looking at close to 40 million. So she was always crying that she missed that opportunity. If you look around you and you believe that a particular real estate is going to skyrocket in price in the nearest future due to a development that is coming, you can instantly put money down and say, in the next 10 years, 20 years, when this place has been developed, I'm going to sell my assets and make money and make profit, capital gains from the sale of the asset. So other alternative assets are agriculture, cryptocurrency, Eurobond. Agriculture in terms of, I remember there was a time when agricultural investments was going up. I think I don't. My brain has frozen up. But I know partnership also and other ones were around where you put your money, the company uses it to invest and do agricultural investments, and at the end of the day, when they harvest and sell, the money they get The profit is shared to the investors. I think they messed that a lot in Nigeria, and we no longer have many of such in Nigeria again. Then the next one we have is cryptocurrency, which is very volatile. I think Bitcoin has dropped from 80 to around $60,000 now, or pounds. At this point, I need to be conversant with it. Ethereum has also dropped from 2,000 to around 1,000 plus. So it's very, very volatile. But I remember in 2020 when when COVID-19 happened, Bitcoin dropped to around 29,000 and people bought. So those people that bought when it was 29,000, this is 60. That's already 100%. I see people that say on Twitter, oh, I know of the best students in my class who decided to go into cryptocurrency in 2020 when it was buzzing, and the guy made money from it and he has retired. He's doing his own thing right now. So you can decide to do cryptocurrency, you make money from it. Like I said, with investments, I risk, I return. I remember the other day we were talking about BNB. We knew when BNB was 15 pounds in $50 in 2020. Now it's around $600. You get, so there are possibility like that, but also don't forget that there are some that have also failed. In terms of SHIB and Dogecoin, everybody knows what Elon Musk did with Dogecoin. They pumped and pumped and pumped it. People bought thinking that they were going to be multi-millionaires and billionaires, and at the end of the day is what, zero. That's it. So you have to be very careful. As some have positive stories, there are also some that have negative stories. Euro bonds, I've mentioned it earlier. Now, where to invest and platforms and brokers. This was my little research. So check to make sure that what I've done is correct, but I did my own research and this was what I was able to get. So we've got licensed brokers, Stanbic IBTC. I love Stanbic IBTC. I always mention it anytime. If should I decide that I want to invest, come back to investing in Nigeria, I'll probably start with Stanbic IBTC. I am not doing any promotion for them. Please do your research. We have Cordro Security. You have United Capital Security, Chapel Hill, Denham, CSS stockbrokers. When we say licensed stockbrokers, that means that they've gotten the license, they are regulated. And so these people, you are sure that they're not going to just close up shop one day. These are licensed people. They are committed to, they are regulated basically. So their activities, you're not worried about fraudulent activities going on. You're not worried about them harming you or anything. These are people that have to submit financial returns to their regulators to show that they are putting customers at the forefront of their business. And then you have digital investment platforms. We have Bamboo. Everyone knows about Bamboo. We have Chaka. We have Trove. We have Rice Invest. We have CareerWise. Please do your research. Always verify your platform before investing. It is very important. Money, I always tell people it's not that easy to get money, so you don't want to lose the money. The first rule of investing: never lose your money. So always do your research. How to start investing? This is very, very important. The reason why I said so is, as a beginner, you will go on especially those platforms that have got interactive platforms. You will go on the platform and you will see someone is showing you, I just made 1 million naira from this investment. Or I just made on Twitter, I just made 30 million. If you have invested in this particular stock, you have to be careful. You will see a lot of that going on. And you're going to either be frustrated, or you're going to be feeling low. So you have to be very careful with what you are doing. So, and that's the reason why how to start investing is very important for beginners. The most important thing is set clear goals. When I wanted to start investing, I set clear goal. What do I want to be? Do I want to be a dividend investor? Do I want to be a high growth investor? Do I want to mix both? Do I want to be a high risk investor? Ask yourself, why do you want to invest? Do you want to invest for retirement? Someone that wants to invest for retirement will not be doing investment in penny stock. Someone that wants to invest for retirement will not be putting money in very volatile assets. So you have to be very, very clear. And somebody that wants to just make money will not be putting money in low risk assets. Low risk assets are assets that you put money today, probably at the end of the year, you get 3% return, 5% return. Someone that wants to make money will not do that. So you see then they take risk. Those are the people that you see buying penny stocks. Those are the people buying, risky assets. So the first thing first, you ask yourself, what kind of investor do I want to be? When I started as a dividend investor. I started with mutual funds. The money, when I saved that money, I cried tears and blood to save the money. So the money was not going to run away. I had to make sure that I was clear on what I wanted to do. I kept the money in a low risk mutual fund and a mutual fund that was giving me dividends. When I started making extra cash and I realized that, oh, this money I kept in this investment, I don't mind even if I lose it or, I decided to take higher. And that's why most of my portfolio now are high growth stocks, even though I still have the mutual funds and I have high growth stocks. Some of my portfolio, I think in US, I invest mostly in US stocks. One of my assets has gone from, I think, 65 to $15. Yes, I'm not selling the asset because I knew what I invested in, and I knew I did my due diligence before investing in the stock, and I know it's going to bounce back. But someone that you know how you got your money, you know that if that money should, as it dropped like that, you are going to waver. I would say be clear and don't invest in such high growth stocks. I can weather the, like I told you, I have over 40 years to invest into retirement. So, and I know the company is going to be there. Even if the company is not going to be there, I have enough it will cover up for the fall in price. So that's why I did I that's how I set my goal. I have this I'm saving for it, I'm investing for retirement, but I have a longer horizon rather than putting it in safe asset. I invest in what I have a little bit of safe asset, 20%, 30% in my portfolio, and remaining 70% are high risk assets, and I can weather the storm. And that's how I invested. But for people, like I said, beginners, be clear. Do you want it to make money for you right now? If you want it to make money for you right now, you can't do as I did. You will have probably, look for something that will give you money. Look for something that will give you money in the next 5 months. You look at what's the next boss, and you put your money in it and may go. So that's what it means to set clear goals. The next thing is build emergency fund. I remember someone kept in the chat here. Only invest with money that you can afford to lose. The next thing is to ensure that you have an emergency fund. Like as I mentioned, my stock has gotten from $65 to $15. Some people's stocks have gotten from 1,000 naira to 200 naira. You don't want to be forced to sell that asset because you want to quickly pay for your education. You have to have emergency fund. The emergency fund, so this is 3 to 6 months. Generally, I say 6 months, at least 6 months of expenses before you start investing. I had that before I started investing. Save at least 6 months of money for your expenses. Put them aside. You can put it in a fixed savings account. You can put it in a money market fund. Just something that you know that the risk of it, your money disappearing is 0 to 10. That's it. So you have that emergency fund. Once you have that emergency fund, you put it aside and then it starts generating money that you will use to invest. When I started, I didn't go and drop 1,000 instantly. I started with £100 and I used that to learn. And I was also lucky that the platform I used to invest gave what we call virtual money, which I used to learn how to invest. The next thing is choose investment platform wisely. Some people love bamboo. Some people love using licensed stockbrokers. You have to know the difference. I think I don't know how it really works in Nigeria, but for UK, yeah, when I use licensed stockbrokers, I give them my money. I tell them the stocks I want to buy, and they buy the stocks on my behalf. And the stock probably shows in my accounts in the next 2 working days. But when I use general platforms like Trading 212, when I buy a stock within 1 minute, I've bought the stock. So it could be something like that on Bamboo. Maybe when you buy the stock, instantly you see the stock shows in your portfolio. But when you buy through Stanbic IBTC, when you buy probably 2 days later, you see the stock show in your portfolio. The reason why I said so is when I started, I always like to use when I started so that you can understand what I mean. When I started, the mutual funds was in a stockbroker's store. I learned that, oh, when I buy this, they are the one that buy it for me on the market. Like they go onto the exchange, buying and selling. Somebody will see the amount they want to use and buy the stock and say, okay, I agree, and I will pay you for this. And then when they agree, when the buyer and seller has agreed, you sit in your investment. And it takes around 2 working days. And for funds in UK, it takes around 45. In Nigeria, probably is the same thing. T plus one, T plus four. T is the trading day, the day you decide to buy, and plus one probably the day it's the sale completes and you see it in your account. So when I saw that, I was like, I don't want it because I'm not able to manage my account. I don't like the stockbroker stuff. So I decided to go to platforms like Bamboo and Trading 212 and decided to invest there because now when I buy a stock and I feel like it is falling, I quickly sell. And then when it has fallen, I go and buy the stock again. So I was doing that arbitrage when I was, when I decided to take on risk. So you can decide that that's what, if Bamboo offers that, if Trove offers that, you can decide that you want to see how it feels to buy and sell. Do you understand? You just try. And most of the time, I tell you, use the money you can afford to use to do that trading. That's what we call trading. Generally for investments, you want to put in stockbrokers and you just keep on adding money, keep on putting money into this asset you've bought. And because you know they will be there for a long time, you are sure that any day you wake up in the next 20 years, you can see it and you're not worried about trading because you are not timing the market. What I was doing on those platforms was timing the market, which is not good. The next thing is to start small and diversify. Like I said, I started with £100 here. You can start with 10,000 naira. There are investment that you can start with a minimum of 10,000 naira, a minimum of 50,000 naira. Start with it, and start diversifying. Probably you put 10,000 naira. If you have 10,000 naira, you put 5,000 naira in to buy a small MTN, and then you put 5,000 naira to buy a bond, or you put 5,000 naira in a mutual fund. I think the minimum you can put in mutual fund is 5,000 naira. So you watch them and start looking at, okay, which one of them do I like more? And then you continue investing in it. The next thing is educate yourself. I love that book from Morgan Housel, The Psychology of Money. And it allows you to think and see how people make money. Yeah, so educate yourself with books. I remember also I took an accounting book or an investment book or CFA book, and I was looking at it. I wasn't planning on writing the exam, but I was looking at it to see if I can learn something from it. So read, look at financial statements of the companies you want to buy and look at it and say, okay, the risk that they mentioned in their financial statement, is this something that can materialize in the next future? Take, for example, what's happening in the stock market today. Duolingo's price in Nigeria has gone, in UK, US has gone down. Let me use Is there a stock in Nigeria that has gone down? Look at a stock in Nigeria that was high and then went down, and go look at their financial statement. Was there a risk that they mentioned in their financial statement that actually materialized and caused their stock to come down? So look at and then look at also companies that people have been trying to buy. People buy, and when they make profits, they are unable to sell. You want to try and avoid those kind of companies because it makes no sense for you to have returns of 150%, 200%. When it comes to selling, you cannot sell the stock. So these are how you learn, when you want to buy, invest. It's important that you educate yourself. Don't look at returns, especially the last thing I said. Don't look at returns and say, oh, this stock did 1,000% return in 2025. You have to ask yourself, what's the volume? How many people are buying that stock? Two, when I want to sell the stock to make profit, are there people willing to buy the stock at that particular price? So the fact that a stock has gone high does not mean that the liquidity in the market, there's liquidity in the market for that stock. And the last thing is monitor and adjust. There are some stocks that you know that when you bought it, you had optimism that it's going to increase in price, but it never did. What you just do is ask yourself, does my conviction still remain that this stock is going to perform? If it's not going to perform, you remove it from your portfolio. Then you look at another one. Oh, this particular stock I bought, it has increased in price. It has probably you bought MTN at 100 and it's now around 300 naira. Like MTN has gone from being 10% of my entire portfolio to now 50% of my entire portfolio. You ask yourself, do you want to keep on riding the profit, or do you want to sell it and buy other assets in your portfolio? That's what we know. That's what is called rebalancing. Rebalancing is, oh, a stock I bought, which was 5% of the portfolio, has now become 55%. I don't like the fact that it's too high. So what I'll do is I'm going to sell some, and I'll take some profit, that sell some, and then use the money from the profit and buy other assets to bring them back. So that stock that has gone to 55% of the portfolio can now come down to probably 20% of the portfolio. So that's rebalancing your portfolio. So common mistake to avoid: investing without research. It is very important that you invest with research. And that's the reason why we don't give you stock picks on S&P in S&P Finance Club, because we understand that investing is very emotional. It is very, very emotional. If I give you a stock to buy and you buy it and the stock went down, you will come and fight me. You will tell everybody that you know that S&P Finance Club is not a true club. But if you go and do an investment, if you go and invest and research on the stock and you buy it, if it comes that you already know that you did your own work, yes, the market can just act irrational and the price of your asset come down, but you still believe that the stock will go back. So when you make such decisions yourself, you are confident with any consequences that come your way. So investing without research is a very, very bad thing. Following hot tips blindly. I see all these things. I remember in my first post last year, this year or so, or I was talking about is it my last? I can't recall. I was talking about those people that come at the end of the year and tell you, if you had bought Nestle in January, you would have gotten so and so millions by now. If you kept 10,000 naira in NCA, you would have. The reason why they come at the end of the year is because they were unable to tell you what is going to be in the beginning of the year. So don't let that affect you, because now you not say, oh, MCN did well last year, maybe I'm gonna buy it this year. It's not, that's not how investment works. Historical returns does not mean that future returns will be the same thing. So be careful with following hot tips blindly. Don't see somebody that say, I remember some. I remember this Dangote refinery. Oh, real estate in Ekpe. If you buy Dangote refinery is coming, you will sell real estate 100 million. People bought a lot of people bought land, and now they're having issues selling the land. So you have to be careful with following all people blindly. Lack of diversification. Do not put your money in one asset. You can spread it, stocks, bond, money, market funds, okay, risky stocks, low risk stocks, low risk bond. You can just diversify. Diversification is very, very good. Most of my individual stocks in the US market, as many of them has come down, but the mutual funds have been doing well, and because I bought them, I've been happy with them. So it's the same thing in Nigeria. Diversify. Some at one point in time, the bond market will be doing better than the stock market. At another point in time, the stock market will be doing better than the bond market. Mutual funds will be doing exceedingly well. Treasury bills will be doing exceedingly well. So you can't really know which one will be doing well. So that's the reason why you diversify, so that when the market goes down like this, you're not worried, because majority of your money will not follow the market down. The next thing is emotional decision making. I said it earlier. Investment is emotional. I remember when I was trading on Bloomberg, and one of the research I was doing was on Tesla. And I noticed that why Tesla can increase in price due to fundamental analysis, sentimental analysis also causes the Tesla stock to increase. It's the same thing in Nigeria. The fact that a stock is doing well, it's not the fact that there's a stock that people like, because you really, really like the stock and you see that everybody's talking about the stock. You've not done research, you just like the stock, everybody likes it, then you go and buy it. And then before you know it, it goes up and it comes down. That's how it is, emotional decision making. You have to be wary of that. The next thing is ignoring fees and charges. This is very, very important. Management fees. If you want to, you are looking for a platform, Look at their management fees. Management fees eat into your profit. It is very, very important. Management fees for mutual funds. How much is the portfolio manager collecting? If you have exchange traded funds in Nigeria, how much is it expense ratio for the managers of the funds? You know, how much is it going to cost you to buy stocks on that particular platform? Another thing is, if you are buying, some of you invest in outside stock on the platform. Ask yourself, how much are they using to convert the naira to dollar? So look at those things very well because they actually eat into your returns. And it's so annoying that even as small as 1% can reduce your portfolio significantly. So check the percentage of the charges. And the last thing, which step I'm chasing the always mentioned in on this group is timing the market. Thou shalt not time the market. It makes no sense to time the market. You don't know what is going to do well. You don't know what is not going to do well. You can't time the market. You just have to ride it. I know a lot of people say the market, bear market, bear market, bear market. The last session I had, I showed you that for every bear, at least on average, for every bear market, they have a bull market of 5 years, 5 to 6 years. So yes, even the market comes down. If you ride it very well, you will see that at the end of the day, you always win. I saw someone that said it kept amount netly was around 100 naira in the 80s. Netly is around 2000. If it has not split 1000, 2000. So imagine if you had been selling your stock and you're worried that, oh, 2008 crash, Nestle has crashed and every other thing. You would have missed a lot if you had sold then. So most of us were not born then, but now is the best times for you to buy an asset because you don't know what's going to happen in the coming years. So never ever time the market. That's for traders to do. And traders never always beat the market. So I'll try and rush through so that we have the remaining minutes to do. So key investment principle, start early to benefit from compound interest. Compound interest, the beauty, see, um, Warren Buffett says compound interest is the beautiful thing, most beautiful thing about investments. 100 naira, I told you that when you put 100 naira today will be 18 naira next year. But with compounding, when you invest, 100 naira today will be 120. On top of that one, on top of that one, the next year, the 20% will be on the 120%. So that's how it increases. So that's why I said compound interest is the most beautiful thing about investing. Invest regularly, even if it's small amount, put it there. I realized that when I put in money, 100 naira, 1000 naira, 2000 naira, that shawarma I was trying to buy I realized I don't want to eat the shawarma. I was just craving it. When I put the money in the investment, the craving for the shawarma goes. The craving for the perfect goes. So sometimes we are just trying to pacify ourselves, but those are money that you could actually put little by little. You see your portfolio grow. Keep a long-term perspective, especially 5 years. Whatever you have, except if you buy a stock that is very bad, you will surely see. Even if it goes down, it will surely go back up. Don't put in money that you will need to. Remember, I said at least 6 months emergency fund is required. Review and rebalance your portfolio periodically. So now let's look at the power of compound interest. So imagine you are investing 50,000 naira at 20% annual returns, and then let's assume it's for 10 years. This is the formula that we use in investment to calculate to show you how much your money will be in 20 years if you invest 50,000 naira monthly at 20% annual return. So every month, for that year it's 20%, but you're putting in 50,000 naira every month. So this is calculation. So monthly investment is 50,000, annual return is 20,000. Monthly rates will be 20,000 divided by 12 months to tell you how many percent, what percent you are getting monthly on your money. And the time horizon is 10 years. We always convert it to months. So by the time we did the calculation, we show that at 50,000 naira monthly, that's 600,000 naira in a year at 20% annual returns. In 20 years, you're going to have 18,984,000 naira. You can see that you started with 50,000 naira, and little as that, because you are consistent, 600,000 naira in a year, you are able to get 18 million. There are a lot of people that are not going to reach this amount. But and yet it's not as if they were not earning well. It's just that they didn't take advantage of what we know as compound interest. So investing 10 years, 50,000 naira monthly at 20% annual returns gives you 80,984 million naira. So it's 4,000 naira. So you can imagine the beauty. So why have you not started investing? So ready to start your journey? These are recommended resources: SEC to verify license operators, Nigerian Exchange Group for market data, Invest Nigeria platform portal for government bonds and T-bills, and financial literacy book like The Intelligent Investor, Rich Dad, Poor Dad. Remember, investing is a marathon, not a sprint. Start today, start consistent, and watch your wealth grow. Thank you very much. Thank you.
Please, a hand of applause for our own Jenny. Please, a hand of applause for Jenny. Jenny. It's a well delivered
Thank you.
masterclass.
Thank you.
It's a beginner's guide to investing in the stock market. In fact, I like the fact that she started from known to unknown, giving us exposure to fixed income instruments. This is very, very wonderful. Like, very, very wonderful. Thank you, Jenny, for creating this very
For
wonderful masterpiece. We are truly grateful to have you. This is that important time where we welcome questions and comments. I think she's well grounded to have our questions and comments, you know. So if you have any questions, if you have anything bothering you about investing, on how you can get started, now it's time for you to bring on the question, and Jennifer is going to do justice to that. You know,
Hi, Jennifer. Good evening.
hi.
Hi, everybody.
Hello.
Yes, excellent presentation. Thank you. Thank you so much. I appreciate. Just quick, real quick. I do hear people talk about, hey, look for stocks that have good fundamental. Look for stocks that have good fundamentals. What do they really mean? You know, and it's quite tricky knowing what to invest in, or what shares to buy when you are also trying to keep, like, have at the back of your mind, your risk tolerance based on the commitments you have, your age, your status. So what do they really mean by good
So
fundamentals?
thank you very
Thank
much
you.
for for that, Samaila. So it's possible not to go to the acquisition investment terminology, but I think Chika has kept some to where you can see tools to for you to use in analyzing company, know what company to invest in. But for symptoms, I'll simply talk about good fundamentals. They're looking at the cash of the company, what the company is, what business the company is into, and what's the future the company project the companies want to undertake. Now, let's example, um, Charles, let's use MTN. Okay. Now, when you look at MTN, you first of all look at their financial statement. Their financial statement is very important. The financial statement tells if the company if they have money that is used for business operations. It's basically, do the companies have savings, do the companies have investment? The reason why that particular thing is important, we call it free cash, is important because if company doesn't have a lot of money in free cash flow, that means that they can't pay for a lot of their expenses, especially expenses in a year. Uh, Pardon me, I really don't know much about the Nigerian markets. Let me put in Amazon in the UK, in the US. Yeah. What happens is Amazon laid off 30,000 staff some years back. And a lot of people said it was because of AI. But what happened is that many of us decided to delve into their financials and realized that they had a negative cash flow, meaning they could not pay for a lot of their expenses. The expense they had was already higher than the money they could use to pay for it. when they laid off 30 employees, they had about billion dollars from that action. And so their negative cash flow of 4.3 million, they're able to take it out, and then they had equities for them to now invest in their activities. So it's the same thing that company that doesn't have money to pay for its operations, we have warehouse. We can't pay our suppliers, we can't pay our employees, they have money. That company is not around time, because what they will start doing, they'll start borrowing money. And people that are borrowing are expecting a higher risk. You don't have money to do your expense, pay for your expenses. Now you are coming to borrow money from me. I'm not sure if you'll be able to give me back my money. So what I'll do is I will ask you that this money that I want to give you, you pay 40% in interest. The start going down that route, you already said that the company is going to die off person. So that's a important thing check in a company's financial statement is free cash flow. Now that tell you how much the company has. The next thing will be what is the company doing at the moment? Take for example, MTN. MTN is saying they want to expand into other cities. They are bringing in a new something that is to improve their data delivery. They are investing in projects that are going to improve the amount of infrastructure. They're bringing more. You can tell that okay, this company, they see their free cash, they have, they are saying this very good, okay, not good. This project is going to bring in a lot of people and make the existing customers happy. So that means more money is coming in. So it's a good fundamental. It's like that, oh, money's coming in, they have money to pay for this, they're not going to pay for this, and it's going to bring in more clients. That's the fundamental that our money is coming in. The next thing would be um now MTN is highly regulated. The next thing asking yourself, what kind of issues, if they have any issues, what kind of issues are they having with their regulator? Now, the regulator is going to find a company that probably had a profit of 2 billion naira last year, and the regulator is finding the company 2.8 billion. It's 200 million that is left. First of all, that's not a good fundamental. It means that the company is going to collapse if they are unable to pay the regulator. But if NBS is finding um, 200 million, and MTN had a profit of 10, you already can tell that that's just a Q fee. So this is strong fundamental. They are able to any fines, any penalties that they have from their regulator. So basically, when you are looking at fundamentals, you are looking basically at what's the cash flow like in the company for their expenses in the next year, in the next 5 years. Do they have issues with the people, the regulators in the industry? What kind of press are they doing? Their risk, what kind of company that they want to expand to, take for example, uh, Ukraine. It makes no sense because Ukraine is out. A Nigerian company saying they want to expand to Ukraine. It makes no sense because it's at war. So they're going to make money. So you can already see that that's a poor decision making skill in terms of the people that are running the business. Yes, that's that thing. You look at the people that are running the business. What kind of people are their credentials? Was it someone they just picked from, man no man, and then kept in the business, and the person is just running the business? The decision, as a human, looking at it, what are the decisions that, this is surely going to run the business down. So those are the kind of things you should be looking at in terms of strong fundamental. And you can also go on Chica's blog to check what tools you can use that you invest in for extra information on fundamentals. Thank you.
Yeah, thank you so much. Samaila, I hope your questions has been answered. Has it?
Yes, thank you so much. Excellent response. I
Oh,
kept losing
sorry.
her every now and then, but it's okay. Thank you.
All right. Just another thing to add to what she has said is you need to also consider the leadership of the business. With the idea we want to establish here is that when you are investing in stock market, you are not actually investing in the stock market, you are investing in businesses. The stock market is just a platform that gives you opportunity to buy and sell shares of businesses that you have invested in. Do you understand? It's a place where buyers and sellers actually meet. So when we talk about fundamentals, we are not talking about fundamentals as regards the stock market. We are talking about fundamentals as it have to do with the businesses that you wish to invest in. So you need to study everything about the business. Jennifer has mentioned a lot of things that is included in financial statements. Yeah, but leadership of a company is also very important, you know, because if you have a broke friend, for instance, come to you and said, I need 1 million naira to invest in this idea of mine, I'm not sure you will be happy to invest that 1 million naira in the idea. Most especially if your broke friend is someone who is very careless with his own money. You will be very wary, investing that 1 million naira in that particular business. So this is some things that people don't look at when they are investing in businesses. The management of that particular business, the leaders of that particular business. You are even going to look at their personal life, how they manage their money. If they are the type that flaunt money on social media, then you should be wary because that person might be using investors' money for carelessly. Do you understand? So these are things that you need to look out for when you want to invest in the business. If a company's forward guidance is enough to tank their shares, you know, just the way that the company is looking at their business and the profit or revenue of the business or the expansion of the business in the next 2, 5, 10 years into the future is enough to change investors' perception surrounding the business. So it's important that you focus the business entirely, focus on the business that you want to invest in. That's why when Jennifer was trying to distill this concept, I think she did a whole lot of justice in bringing it down. She mentioned something like we don't give you recommendations on businesses that you have to invest in because investing is emotional. You know, the first time I invested in Tesla. Tesla was the first ever shares that I've ever owned in the US stock market. And MTN was the first ever company that I've ever owned their shares in Nigerian stock market. What made me to invest in them in the first place was very emotional. I kind of love MTN, maybe because I worked for them. Yeah. And I kind of love Tesla but because I could not afford to buy Tesla, and Tesla is the only thing that I know as at that time, I just put my
Mhm.
$100 in Tesla. Do you understand? That was very emotional. Yeah. But time has helped me to make a lot of money from these positions, to be fair. But I was very emotional when I first did that investment. So these are the things that you have to actually look into critically before you take a defensible decision. No emphasis to a defensible decision. That I made this decision of my own, devoid of anybody's persuasiveness or manipulation or content creation gimmicks, creators gimmicks on social media. Because Jennifer mentioned that as well, when they will tell you, if you had invested this thing, but these people are doing it to sell their products. They are doing it to sell their courses. They are doing it to invoke your emotions because we all want to invest and make profit. But that's not the way equity market works. Equity market, sometimes you make some and sometimes you lose some, and it's absolutely normal. So we want you to be in the best position where you are making a defensible decision, that you make this decision based on this critical element or factors to be able to open up a position in that particular business. I don't know if any other person have more questions, please.
Yeah, I have one
All right.
question here. Yeah. First and foremost, thank you for the two speakers. You guys are doing very, very well. Great job. Uh, my question is, for someone that stay here um in the UK, and let me direct the questions to myself. And I have interest of investing in stock market in Nigeria, and I stay here in UK. I've started with downloading 22 and every stuff like that. What is the best advice that you can give to people living in the UK? Do you advise so we should diversify? That is, should we invest in Nigeria stock exchange? I think both, or we just focus on UK. I mean, foreign stock exchange, please. I need your sincere advice. Thank you, guys.
Hey, so I don't question a lot, and why I tell people it's based on your risk tolerance. I, for one, I do not invest in the Nigerian stock market because of the fact that it requires me to do a lot of due diligence and focus on the Nigerian news market. And I don't have that time. And the risk in Nigeria is quite high also for me to say I want to invest without doing my own diligence. So if you know you have the opportunity of doing your due diligence for stocks in Nigeria, then you can invest in Nigeria. But if you don't have that time, the only time you have is probably 1 or 2 hours, and you have a lot of stocks in UK, then I'll say do not invest in Nigerian stock market because you do not have time to investigate, review and financial statements of the companies you want. Secondly, if you are not worried about the devaluation of the naira, I think you can invest in the Nigerian stock market in the sense that if you're sure that if you send money to Nigeria today, you send 20 million, you get your 17% return at the end of the year, and you decide to convert the money back to pounds, and you're not worried that the rate will be bad, the exchange rates would wipe out your profit. Then it's a nice thing to do. I know some people that are already doing it. I think the rate has been stable between 180, 1,800 and 2,000. And people have been investing in Nigeria and then converting their profits to pounds back. So if you want to do that, if you don't mind, you can actually take it. But if you have the fear that Naira today is 1,800 pounds, yes, and at the end of the year, it's going to be around 2,000, and you're like, oh, if I send money, by the time I convert the money back, I will lose a lot of money. Then I don't really think you should invest in Nigeria. But if you are willing to take that risk, yes. The reason why I said so is Nigeria is a high risk nation as opposed to the UK. So the returns in Nigeria are quite high. Bond, Euro bond in Nigeria, you can see it's around 8%. In the UK, yeah, if you put your money, they're giving you 2%. And then when you get a high usage, probably 6%, not to talk about the tax that is going to be deducted from it from the UK. So you can decide that, oh, I'll put my money in Eurobond. Eurobond is putting your money in dollar saved in Nigeria. That's what Eurobond is. And you're not worried about Naira devaluation. You get your 6%, 8% at the end of the year, and then you can release it back to yourself. Yeah, you can do that one. So it just depends on, are you willing to do the research that is required in investing in Nigeria? If you are willing to do that, if you are willing to take the risk, yes, why not? If not, you can focus on using trading 212 to master and understand what it means to invest in stocks. And then you can take maybe 1 month or 2 months, review the Nigerian stock market and see what assets are doing well and just put your money in those ones if you don't have time for research. At the end of the day, the decision boils down to your court. Thanks. I hope you're able to hear me because I know my network was messing up before.
Yes.
Thank you.
Yeah, I can hear you clearly. Thank you very much. Thank you.
Did
Shades.
I answer your question?
Yeah. You provided good answers. Thank you very much.
Yeah,
Yeah.
welcome.
Yeah.
Yeah, thank you so much,
Okay.
Jennifer. Just before the next question, yeah, because I see Abbas and Michael, yeah, having raising their hands up, yeah. I will call upon you guys, yeah. Um, we have another team member of ours and our leader, Mr. Seth, who I know personally, has a fair share of experience in terms of investing in Nigeria and investing in the UK and US stock market, yeah. And I would like to call on him. I know he's out unaware that I'm going to call him because I need him to talk from
Yes.
experience, in the next few minutes, to explain, this situation because I really want Oluwa Olatubosu, sorry, Olatubosu to be able to capture this because he's in the UK. Seth, please.
Okay, thank you very much, Cindy. Good evening, everybody. So, because we do not have much time, I will just go straight to the question. So, to answer your question, I would want to ask you a question that I want everybody to think about. Um, and that is when you go back home after today's session, ask yourself, why do you invest? It's a very difficult question. Ask yourself, why do you invest? There are many reasons why people invest. Some obvious reasons will tell you they want to be richer in the future, they want to retire early, they want financial freedom. Um, you know, Answers vary. So when you understand why you want to invest, then you may be in a better position to decide where to put your money. But to give you a direct answer, I would say, yeah, it's a good thing to invest in Nigeria, even if you're based in the UK. Jennifer has made reference to a few data and facts, and that is Nigeria gives you higher returns, and there's also high risk, the risk of currency devaluation and the risk of inflation. Those two devils will definitely eat into your returns, even if you make returns. In the UK as well, is a way much safer investment environment. But I mean, the returns as low as crazy. Um, but I do UK, US, and Nigeria. Why I do those investment primarily is to diversify, right? That's the first one. And the second reason I invest as well is to help to boost to allocate my resources to meaningful economic activities back home because I'm a Nigerian. Um, so I do those things. And when you think about the returns you get back home, and you're also thinking the number of years that you want to invest, you're thinking what you want to do with that money, then you consider if you're making any money from Nigeria. If you're making any money from Nigeria, then invest the money you're making in Nigeria. And if you're making the money in the UK, if you've invested in the UK and you don't want to over concentrate your investment in one location, then you need to diversify into another investment environment, which is where you're from, the Nigeria. So it's a safe thing to do. And if you're also considering the currency devaluation as the naira is devaluing over the years, which is likely from data, historical data, is likely to be the case in the next 10, 20 years. Your investment are also growing, and if their returns are also growing, and as they are growing as well, you have the opportunity to either sell when you want to sell or use the money in naira to solve problems back home in Nigeria if you want to. Then the other thing as well is good to have that experience. If you're not intending to live and die in the United Kingdom or in the United States, there's a need for you to have that experience investing in your own country. You know what it's like, what's the investment terrain like back home. So there are a lot of reasons, to be honest, but again, it boils down to you as an individual, why you invest, what your risk appetite is like, what do you intend to achieve, putting your money in certain places and in certain investment ventures or asset classes. So that's just what I would say for now, in case that helps you to make a better decision. Thank you.
Okay, that was really insightful. Thank you. That's most that answered here. I can see thumbs up.
Perfectly. Thank you very much, Mr. Joseph. Thank you. Thank you.
Thank you, brother.
Yeah, thank you so much, guys. There is one other person, Abbas. Abbas, please, can you now bring up your question for Jennifer?
Okay. All right. Thank you so much, Jennifer. Thank you.
No.
I'm quite new into this. I just started, so I don't know so much. I'm just always trying to learn. My question is, if you invest in stocks and you have some stocks in your portfolio, but let's say there are a few who consistently over weeks have been going down, is it advisable for you to sell them and buy other stocks, or just wait out through, knowing that yes, stocks go down, but they certainly still come up? That's my question. I hope it's
Okay.
clear.
That's the question that a lot of investors ask. Even speaking investors, they ask that question: should I sell? I think everybody knows when to buy, but to sell is the problem. Okay, so it boils down to why did you buy the stock? That's it. I told you one of my stock went from 65 to $15, and I've still not sold it. One thing with investments is when you sell, you lock in your losses instantly. So that means you don't regain your the eyes that you bought the stock at. So if you are ready to lock in that loss and say, okay, I give up the stock, the fundamental is maybe I research and the fundamental is wrong, then you can decide to sell. But if when you wanted to buy the stock, you did your research and you said, oh, this stock has good fundamentals. I think for me, I do hold the stock. For some people, they say they will sell, and if the stocks go further down, then they buy again. Do you understand? So generally, it's basically why did you buy the stock? And then the next thing is the stock that you want to buy. Is there a potential that that one also might go down? Because there's this what we call the Murphy law of investment. Whatever is gonna go wrong is gonna go wrong. That's the Murphy law of investment. You see, whatever can happen, will happen. That's it. Like that's how you. And it's how bad it is. You will sell this stock that is going down, and then by the time you buy the new stock, the one that was going down will start going up. And then you look at your pillow and you ask God, why? Or why me? So it just it's just you asking yourself, do I really want to lock in this losses? If yes, then you know you sell the stock. But so what some people do is there are three things they do. One, they leave the stock as it is. Two, they sell the stock, and when it goes lower, they buy again. Three, they do what is called DCA. That means they keep on buying the stock at the new price and then reduce their average. So those are the three things that most people do. So you ask yourself, do you want to take any advantage of these three things? Remember, you don't have a loss until you lock the loss for the stock that you have. And like I said, fundamentals are the most important thing. Ask yourself, why did I buy the what they're doing now in the nearest, would you be happy if the stock goes further up? If this stock reverses and goes up and you sold and you bought the new stock and that one went down? Or will you be willing to take more losses on this stock that you have? So the decision is in your court. It's not, we are not the ones that can help you with the decision. You just have to ask yourself those questions and then make your choice. Yes. Thank you.
Thank you so much, ma. Thank you.
You're welcome.
Yeah, thank you so much, Jenny. We still have just two more persons to that raise their hands up. Precious, please can you bring on your question?
Good evening, everyone.
Good evening.
Thank
Good
you,
evening.
Jennifer, for the section.
You're welcome.
So, you had mentioned during your discussion that we should do our due diligence and then pick up the financial statement of the company and go through it. So, my question is, what exactly do you look at for when you pick up a company's financial statement? I mean that the stock is a good one to invest in.
Lovely. So, that's a very good question. I think most people in investments are step and chiefly will help you with this answer. But generally, when I pick up a financial statement, the first thing I go to is the chairman statement. Chairman gives you an overview of the company, what they've done for the year, and their vision and mission for the next year. So I look at it to see if it's in Nigeria we call it boo if it's something that can be done, if it's something that they are just overreaching and thinking that it's going to be fine, they can do it. Yeah. Yes, it's just like someone saying with our AI, we are going to get 1 million extra customers. And here you will have up to 50. That's overreaching. You understand? So I look at the command statement. Then the next thing I do is I move on to the chief. I think I did this around the first time. So the next thing I do is I go to the chief financial officer statement. What that place is, that's the best place you should be looking at back. Because what it will tell you is what they spent their money on for that year, what they plan on doing, how much is going to be generated from the project they want to undertake, how much they spent on previous projects, the outcome on those projects. So basically, the chief financial officer is giving you an overview, or is their report card, their financial report card for projects they've undertaken and the project that they are about to undertake and put money in. It's going to give you a very good overview about that. Then the next thing I do is I go to their business model. Now, their business model will tell me if this business model will continue to be viable for the coming future. Imagine what happened with Claude and a legal count also in the US. Claude brought out a tool that could help you do with your legal analysis. Like if you have a court case and anything, just put it in it. If you have a contract, just put it in it. It's a new tool that came last week. And the stock market has been going berserk in the US. Duolingo went from $120 to $15. Legal went to 20. The stocks were going down. So imagine looking at the business model and you're saying, okay, AI is coming into play. Will this business model still be viable, or this new policy is coming into play? Will this business model still be viable? That's it. And then the next one I go to is the risk management. You want to see what kind of risk is from the company internal risk and outside risk. So imagine a company telling you they are expanding to Iran now, and all of a sudden you woke up this morning and saw the US and Israel bomb Iran, and even Dubai right now is on fire. You can already tell that the money they use for that expansion process has gone down the drain if war continues to break out in that particular zone. So you're looking at the risk. You're looking at another risk of, um take for example the new product, the product they have, there is something that they put in the product as a preservative or a formula, and you're looking at it that the NAFDAC is going to ban that product very soon, that particular constituent very soon. So I'm looking at it, okay, this particular product that they have, imagine, let's take for example, I think one of my brother-in-law bought Gaviscon and it was fake. So imagine if you buy a particular medication and then there was something inside it. I'm not saying that Gaviscon is fake, please do not quote me wrong. I'm just saying that imagine you buy a particular product and there is a particular ingredient inside it, and NAFDAC decides that, oh, we are about to ban this thing. And that particular product that they have this ingredient in is one that brings the most money for them. You can already tell that that product is going from bestseller of the company to loss leader, loss for the company. So that means their revenue is going to tank. So you are looking at their risk management. And then the most important, the final thing, which is what we look at, is the financial statement. We are looking at the health of the company financially. We're looking at the income statement to look at the revenue, their operating expenses. We are looking at the balance sheet to look at what assets they have, free cash flow. I remember I mentioned free cash flow earlier on. Free cash flow is money that the company can use to sort out their expenses within a year and all within a year or when we have current assets. You're looking at them that, okay, we can see your expenses, we can see where you're putting your money into, but do you have enough money to keep business running? So that's one thing you look at in the financial, the balance sheet and the cash flow statement. So income, cash flow, and balance sheet are the financial, show you the financial health of the company. Once you're done, you can then paraculate and start looking at labor costs. Okay, if you've noticed that when a company says they are reducing labor costs, everybody is happy. That's because if you are paying a lot of money to keep your labor, it's taking a lot of money from your revenue. So when when they reduce workers, investors are happy because it gives the company more money, back more money. So you're looking at it that, oh, who is earning more and who is what's the compensation rate, especially for people that want to also work in those companies. They put the amount they pay for their employees. And I think the last thing would be the shareholding structure. You want to know who are the people, shareholders of the company. Do you like them? What do the shareholders stand up for? If you see a shareholder that a company that has a shareholder is known money laundering, fraud, and all, you can already tell that regulatory bodies are going to come to this firm in the nearest future. So you ask yourself, do I really want to make that take that risk and invest in that? For me, those are the things I generally look at when I review the financial statement of a company. So let me leave the floor for Chisindy and Joseph to see if they have more to add. Thank
Yeah, thank you so much, Jenny. Yeah. I want to, because of time, because we're almost like 2 hours in this class. I want to keep Seb for the last because I know Seb definitely has a lot of things to say. He's someone who is so passionate about finance. So if you want to engage Seb on a long conversation, talk about money, talk about investment. So he's always eager. So in that, I would like to welcome, Emanuela with her question or comments just before we get set in.
you.
Okay, good evening, everyone. Thank you so much, Jennifer, for your section.
Mhm.
So, this class, this section is actually for beginners, and I know that one of the challenges we will face as the beginners when it comes to stock and everything that surrounds it is understanding the documents. So, I remember most of the times I've tried to send in inquiries, trying to get direct information on the group, which most times have been responded to very well. But the issue now is, just as you said, Jennifer, you said we should study study the culture of the organization we want to invest in. But most times I struggle with reading those documents to understand it well. So as a beginner, is there another way we can actually see these documents about this company, and then the information in this document becomes so easy for us to understand, because it involves charts and all of that. So for someone that doesn't know how to read charts and all of that, is there another method we can use to make it more easy as a beginner in the stock market? Then secondly, all the things you listed that could help an investor get to know about an organization, is it open to the public by these organizations? Do they post them and all of that? Because the source is also important for us to know where to get them from. Thank you.
Okay, Emanuela. For your second question, yes, every listed company is expected to send in their documents, and you can, once you search, you just search annual reports or quarterly reports for any company you want, and then to bring it out on Google for you. Or you can go to the Nigeria Exchange Group website, and you should be able to see companies and which they filed. At least when I was there, I was able to see companies. So on the Nigeria Exchange Group, you see, look for the particular company that you want to invest in. And once you click on the name, you can see all the documents they put into the capital market regulator, and then you can read through and understand it. For understanding books, the financial statements and all, first of all, we are quite lucky that we are in the era of AI. So I don't know if you have access to ChatGPT and Claude, the free versions. They are actually very good. If you are a beginner and you are having issues, what you can do is upload the documents, or you don't even need to upload the documents. You can tell Chat, you say, "Hi Chat, based on so and so quarterly reports, can you give me a download of the company's financial statement, like a summary? And then can you tell me what the chief financial officer is saying, and what the CEO is saying? Can you give me a summary of what their financial statement is saying, summary of what their projects will be?" And Chat and Claude are very, very good, especially Claude. I stand by Claude, and they will give you a summary. Sometimes I tell it to give me a PDF, and then it gives me a download PDF I can download and just review. Sometimes you can tell it to give it, explain to you as a 5-year-old. It will revise the document and send to you. If you have any questions in terms of chart, in terms of numbers, just pop it there. You can take a screenshot, or you can just write it in, or you can just tell it based on this particular document. Tell me more about page 30 something, page 40, and Chat and Claude will give you a download of that. Then the next thing, the thing that really helped me again was YouTube. YouTube is a very good learning platform. I started with, okay, um let's analyze a sample financial statement. And I saw it, going through income statement, and they told me revenue. I think there was a time I was having issues with cost of goods sold and cost of sale. I understand, they were able to explain it on YouTube, and I was able to understand it. So most of the time we you have to go and use all these platforms that are available to you. You might not understand you. It is first of all daunting because when you get the documents, they're almost 100 pages sometimes. So you don't even know where to start. So you can start by ChatGPT and Claude. They explain to you. If you open a particular page you don't, and you can go on YouTube and say, "Oh, this person, this company." I don't know if they do a lot of financial analysis for Nigerian assets, but you can go on YouTube and say, "MTN latest report, MTN latest report explained," and then they start downloading. Then you see videos, and you can watch those videos explaining these things for you. And then the next thing would be you can look for book. I remember I said earlier on that I had to download the CFA, one of the CFA books, and looking at how to calculate investment returns and what to look for. So those kind of books can be helpful. You don't necessarily need to want to write the exam. You can look for someone that has it and you can learn. And then there are also books on PDFs on Google. You can say financial statements and dummy, dummy, dummy learning or something, or beginner learning, and then you can explain. So I think basically you don't necessarily have to wait to get the financial statement. You can also hear about people's opinions. I know I say be wary of people's opinion, but when you learn from multiple people, from different people, you'll be able to see what is the fact and what is the intelligent stuff to pick out from. So first thing first, I'll say the next step for you to do is to start with ChatGPT and Claude, and you should be fine with that. Thanks.
All right. Thank you so much. Thank you so much,
You're
Jennifer.
welcome.
Hey, I know everyone is excited. Emanuela, yeah, I just want to tell you that I was once like you. I'm not a finance guy, so to say. I didn't I didn't go to school studying finance. If you go into my background very well, you see that I studied microbiology at University of Nigeria and Soccer.
Hey, and
This
that's
is
my
something
course
very much
also.
unrelated.
Studying microbiology.
This is something very much unrelated to finance. Yeah. And when we bring up our founder, who is going to like wrap up this class for us, you will see that his background is entirely different as well. I don't want to mention it because once I mention it, everybody will start laughing. Me, I still have hope then because they will say you can work in the lab, you
Oh,
can work the. So why am I saying this? Yeah, the way you get yourself immersed in this, in financial literacy, is already what you are doing. I termed it two based approaches, the personal based approach and the community based approach. Getting yourself involved with S&P Finance Club has offered you that platform to reawaken your desire and spirit of, you know, amassing financial freedom for yourself. It depends on what financial freedom means to you. It could be a 1 million naira, it could be a 1 billion naira. It depends. So it's unique to you. And then the personal based financial approach is the one that Jennifer has carefully outlined for you. It is important that you immerse yourself in the process. I'm not sure the books that you have read, that have exposed you towards wanting to know more. There are several books that we usually recommend you know, because the beginning of this journey, even though we are talking about the stock market, is behavioral finance. That is the beginning of the journey. This is where all these things started. Your behavior towards money, how you see money, how you perceive money, and how money actually works for you. That is where it starts from. So usually when I meet people who are new to finance, I usually tell them, let us handle or tackle the behavioral aspect of your finance by giving you books that give you access to the basic principles of financial literacy. Books like The Richest Man in Babylon, books like The Smart Money Woman, books like Psychology of Money, you know, books. There are so many of them, that helps you to expose you to the financial world, starting with the basic principles and then gradually expose you to the financial terms that comes with it, you know. But right now, I was so happy when Jenny mentioned AI or this AI platform because I use it. And I'm sure many people that are here who are experts in the industry actually use AI to make work easier for them. Now with AI, you can distill it, but I don't want you to jump with AI. first. I want you to begin this journey from that aspect that I just mentioned, because it's going to help you a whole lot. The personal based approach, reading books, YouTube, getting in tune with the AI stuff. And from there, you'll get to start understanding all these financial concepts. I'm going to invite Feb because I have an announcement at the end. Sep will take just a few minutes to wrap it up. But before then, I want to specially thank our madam. You know why I use the word our madam Jenny for her time. Her time is money. If you have ever chatted her up, you will know that her time is money. She's actually a very busy person. But whenever she's called upon to come and impact knowledge, she's always willing to pause everything that she's doing to come and impact knowledge for free, without being paid a dime, without getting a tap on her shoulder, without financing her next holiday destination, nothing at all. She's just a woman who is so passionate about investing in people life and sharing knowledge, which is so wonderful. Please, if you have time, just click a
Okay.
hand of applause for her.
Thank you.
YSEP, come on.
Thank you
Thank you
so
so
much,
much, Jenny.
Chisimbi.
Sepi,
Yeah, thank you very much, Chisindia, and thank you, Jenny. Although we agreed to end the session by 8:45 or 9:45 Nigerian time, so I mean we passed the time. But I have two things to add. So the first one is Chisindia subtly pointed to it, and that is to tell every beginner the sad truth, the sad reality, and the sad reality is if you want to go far in this investment thing, you need to rewire your mind, make up your mind to put in the work, and the work requires you to learn. Now, with AI and with the community we have here, things are much easier. Learning is much easier. I mean, gaining access is much easier. Someone like Chisimdi, Jennifer, Chika, myself, I wouldn't have known or met any of you, and there's a possibility or 99% probability that you wouldn't have met me, to ask me any question. But with the community we have, you can easily reach out to anybody and ask questions or ask in a DM or ask in a group chat rather. So it makes it a bit easier for you, but it doesn't take away the work that you need to put into learning because whatever you learn is yours to keep. And if AI is no longer there tomorrow, you can always make better investment decisions. So the only thing Jennifer answered the question about what to look out for if you're a beginner. The other thing I would want to talk about is every listed company is mandated by regulation to report financial statements. So you can't say you're interested in a company and you can't find the financial statement. It's impossible. So if they miss out, I think 2 or 3 weeks deadline, and they do that, they get fined. And if they miss out on it for the next couple of weeks, they get delisted from the exchange. So you can always find the financial report. And if you're starting out, you can understand basic words and English. You'll find technical terms anyway in there, but you go straight to the management discussions and analysis. The Chairman's report, like Jennifer mentioned, also gives you some clues. But you go there, that's where you can read even some subtle mention about what the business model is like, what the risks are like, what they plan to do for the future, all the challenges they had, and they intend to face. And the other one is also to mention that different companies report financial statements in a slightly different way. Now, the financial statement of a bank is not going to give you the exact metrics that you may want if you want to analyze the financial statement of an insurance company or the financial statements of MTN, because the banks and the insurance companies, they have things like the finance income, the investment income that are mandatory requirements, how much they get from deposits. So you can't compare that to a manufacturing industry. And these are some of the technical nuances that you may not know until you've undertaken the learning. But every company reports profit. So just go straight again to the profit or the revenue to see how much has come in. And after it has come in, they've made all the necessary expenses, how much is left for them. Now, this may not paint the true picture because there are a lot of things behind that profit, but at least as a beginner, it will give you a clue if on an absolute number, from an absolute number perspective, if this company is doing well or not, right? So that answers that. The other thing I would want to leave us with that's taken me, not to exaggerate, I would say 10 months to complete and conduct the research myself. I will leave it to you guys now as a beginner and even as expert is investment in the stock market is historically one of the only investments that you would do. And over 20 years, the probability of you making losses is almost zero. So what I mean by that is if you're scared or worried that your investment or the stock you've invested in is tanking and the price is declining, it's because you've gone into that by what people told you, or you've gone into that to invest in the short term. Chika dropped something in the chat box, and that is you don't invest money that you're supposed to save. So you save money because you want to be saved, but you don't invest money because you want to be saved. I told you guys to go back and ask yourself, why do I invest? Why do I want to invest? Now, if you're investing money because you want to be saved next week, next month, next 2 years, then you're doing the right thing using the wrong method. Then you can simply just go and invest the money in, fixed deposit, or, that's why banks are there. That's why you have things like piggy banks. But if you want to invest properly, I would always advise, regardless of your investment objectives, think long term. Now, if you invest over 10 years, you stand just less than 10% chance of losing anything from your investment over the 10 years, netting against inflation. But if you invest over a 20-year period, then you stand nearly zero chance of losing anything over a 20-year period, netting against inflation. And like I said, it took me a lot of months to get the data to do this thing. So that's one thing. One secret I'm giving all of you now. If you're retiring in 40 years, like Jennifer, someone like me and Cindy, maybe in 70 years, because we are very young. So we still have many years to, to invest. Don't mind me anyway. I may retire even next year because I mean the struggle is real. But the idea is, and if you're going into any investment, think long term. And once you invest, just take your mind out of it. Keep monitoring your investment. Keep reading what the company is all about. So in case there's a need for you to take drastic decision, if a company is going bankrupt, is a different thing. It's not a systemic risk. It's not a market volatility issue. Then it's fine for you to sell off because this company is going bankrupt. They are going extinct. So you can just sell off if you can. Anyway, but if you're not having those extreme cases, not even global crises are normal. The financial crisis, COVID, they come and they go. And it's even much better that they come so that people like us can buy when prices are low. But think long term, and I believe you make much better profits and get much better benefit from your investment if you think long term. So that's just my contribution to today's session. There's a lot to talk about. There's a lot to learn, but thankfully we meet every month and we have a community WhatsApp group so we can take our conversations over there.
Thank
Thank
you,
you,
sir.
Chisamdi. And thank you,
Thank
Jen.
you.
Yeah, thank you so much, Seth. Seth. Joseph Seth Ugu is the founder of S&P Finance Club. Yeah, yeah. Thank you so much for your vision. It's always nice listening to you, sir. Yes, guys, we have come to the end of tonight's section. But we know that the stock market is not a topic we can exhaust in just a single section, 2 hour section. Jennifer and Joseph are still studying it, haven't even worked in the stock market for in the past few years. They are still studying the market because the market is always evolving. It's not something we exhaust in a single day. So we have something in stock because we'll be having the Global Money Week beginning from 16th to 22nd of March. So we have something in stock, especially we want to carefully capture the fundamentals of investing in the stock market because I've seen that there are a lot of questions from our platform, from even this section that we have, that is why we needed Jennifer to introduce this topic, in the best way that anyone can actually understand it because she's the only one that is caring enough to bring it down
This
to
is
our
legal
level. You
weapon.
know, that's why we don't want Self to handle it. Self will use grammar and finish everybody. So So that's the big announcement that is coming, because we'll be inviting people, experienced people, to come and x-ray the fundamentals of investing in the stock market, which we are going to use to commemorate the Global Money Week. Yes, and the second announcement is that last year we started just a small book, about investing in the stock market. And I'm glad to let us know today that the book is near completion, is 99% complete. The people that are holding us now is just Madam Jennifer and Seth. Once they give their approval, everyone is going to get the book. And I'm sure with the richness of the content of the book, many of us will actually have our hands wrapped up on investing in the stock market. So it's an excellent work done by these persons, and we are grateful. Please, a hand of applause for them. A hand of applause for them. We are grateful. Yes, I also want to announce that we have a WhatsApp platform for those that are joining us for the first time. The link has also been shared on the chat. So click on the link to join our WhatsApp platform so you can follow updates, bring up your questions, and get response in record time. And then we have a YouTube channel, which has also been shared on the chat box and on the WhatsApp platform, just in case you want to follow our previous sections to understand how you can involve financially. We have a blog, the S&P Finance Club blog, where we publish articles, articles that are people centered, not the one that there's plenty grammar, that can help you distill the processes of involving financially. So our ultimate goal as S&P Finance Club is to democratize personal finance among young Nigerians and West Africa. Thank you so much for being part of this journey. I am truly grateful. Thank you guys. Have a good night. See you at the Global Money Week.
Thank you, Zimi. Thank you everyone for coming. I'm really grateful.
Thank you. Thank you, everyone.